Hey folks, back with us today is Mark Collinsworth of Vere Global Wealth Management to talk about Trump's obsession now with getting rid of Fed Chairman Jerome Powell, saying that the rates are still kept too high. They should have been lowered by now, and it's wrecking the economic recovery. So, Mark, is Trump right on track here, or is he exaggerating the problem?
Thank you, Larry. I think he's kind of exaggerating the problem because of course, he wants lower interest rates because what's lower interest rates going to do? It's going to create more jobs. It's going to boost up the stock market. And there is a correlation between job growth and the stock performance of the stock market on election cycles. So based on history, if the Fed was to cut interest rates right now, you wouldn't see the full effects of those interest rate cuts actually fully getting into the economy until about this time next year, which is right on the cusp of the midterm elections.
So, Trump is trying to time it for that then.
Correct. I think that's the direction he's going.
Okay, but should they be lower at this point? I mean, is the economy stable enough and recovered enough so that there's no reason to keep the interest rates as high as they are?
Well, I think interest rates are a little bit on the high side, but at the same time, the economy is not slowing exponentially. The inflation rate is still above the Fed's target rate, which we're running about 3%. Fed wants it down to about 2%. And it has been coming down. So I think the Fed has a little bit of a leeway in there. What my bigger concern is, and Trump mentioned this today in one of his speeches, is that based on where current interest rates are at, we're going to pay over $1 trillion in interest on our debt. So that is a problem there longer term.
All right, so the sooner the interest rates are lower, the lower we could make the debt. So Trump is has an argument there.
Correct on the interest rate, because this year we have about $7.2 trillion that's actually going to be refinanced. That $7.2 trillion is going from interest rates. Basically, that's 5-year treasury bonds. Those are interest rates that were below 1% back here during COVID. They're expiring this year, meaning they'll reset at 4%. So almost a 300% increase in your interest payments.
All right, so Mark, in balance, should Trump stay on Powell's case, and should Powell by rights lower them at least to some extent by now in order to decrease the debt, or in balance, what's the right thing to do at this point?
Well, I hate to say this. I'm going to use the same thing the Fed says is be data dependent. I would want to look at the data and make sure the data doesn't suggest, there's a recession or there is a recession and that inflation is actually coming down. And another wrench in the system here is we still don't know about these tariffs. Come August, all these tariffs are going to reset. Is that going to cause more inflation in the markets? That's an unknown. So I don't know if you really want to cut interest rates going into an unknown event like that.
But so far, Trump's approach to tariffs as a bargaining chip have been working, hasn't it?
Um, Not really. I mean, I'm sure you probably heard that back here that come July 9th, that's when they put the delay on all the tariffs. They had all these tariff deals. People were beating the doors down trying to get tariff agreements signed. Well, I've only seen, I think we've seen one country assign a tariff deal since. Now they've pushed all the tariffs off until August because nobody wants to negotiate.
But have they already lowered tariffs on their end? And isn't that already encouraging more business investment in the U.S., as Trump claimed?
Well, there is more. The smart businessmen overseas are actually building more factories here to avoid those tariffs because they think those tariffs are actually going to be put in place,
Right.
which, you know, I think that's a smart move. Um, and at the very least, it actually builds you up a little more rapport with Donald Trump so he doesn't do something against you. So it works in that degree. But right now, the United States messed up this problem back in the 90s. Trump cannot fix this problem with like the problems with NAFTA, the tariffs, and all this stuff. This was a problem that took almost 30 years to develop, and you cannot change it in a year, let alone 4 years.
But generally, is Trump on the right track?
He's absolutely on the right track. It's too little, too late.
Uh-huh. All right. So, Mark, you're an investment counselor. After the scare last year with the dips in the stock market and all that, are we on a more even track now, a more even level? And what's your advice to investors now? Still go to cash, get back in the market? What?
I would say you still need to be in the market. Now there is the old saying, the old saying, sell May, go away, because historically the time between May and the end of October is actually the worst performing 6 months of the year. But from my experience, the saying really should be say goodbye to July, because once we get into August, that historically is when the traditional fall slowdown in the stock market actually starts.
So your advice to your clients now is what?
Invest, but don't go crazy. Some of these people go out and they put a lot of money in like Bitcoin stuff and tech. It's okay to have some tech in your portfolio, but don't put your entire portfolio in technology stocks. Own some tech, own some banks, own some consumer staples, and no matter what the market does, odds are you should do very well with that.
All right, switching topics there. Bitcoin. Is that just, a creation of nothing, or is it something that people should get on board with?
I really don't say. I'm going to have to. Jamie Dimon. They actually asked Jamie Dimon about this about 3 or 4 months ago, and he said, he doesn't believe there's really a future to Bitcoin. They refuse to hold Bitcoin over at JP Morgan. However, he did say that they are going to do transactions in Bitcoin. And I can say I think there's a lot of money, because there's people out there just don't understand, why does Bitcoin go up? Because a bunch of people say it should. It generates no cash flows, no dividends. It has no balance sheet. It's just nothing. It's air. I mean, if you were in the Arctic Circle and you were freezing to death, would you rather have $1 million in cash, or would you rather have $1 million in Bitcoin? I'm going to pick the cash because you at least can burn it.
That's a good analogy. So, but yet it's working, even though it may consist of air. If everybody agrees that it's worth something, then it becomes worth something, does it
Well,
not?
well, let's not forget. Let's go back to the late 1600s with what was called the tulip bubble.
Oh, yeah.
So tulip bubbles were, they were literally the seeds that grow tulips. Those things went from trading for 3 cents a bulb to trading at $12 a bulb. Why did they go to $12? Shoot, $12 is more expensive even today. What they go for?
It's because people got on board with it as a good
Yep,
investment. So
they
that,
thought it was a good investment, but it was the same thing. It's um it's people believing in something. I mean, why did tulip bulbs go up like that? There was no reason for them to. It's just when people get in that psyche and they start going with stuff. I mean, look at how many things have popped up. How many digital currencies do we have out there? And I always use this, just like during the Great Depression, when the Fed was printing cash, people was taking that cash and buying gold. Well, the Fed sat back and go, well, hey, we want this money to be spent in the economy. They went and made gold illegal. And they confiscated it from people and they actually gave money for it. So, they didn't like steal it from them. That's how we got the gold in Fort Knox. Same thing with Bitcoin. If there's another, like, let's say a 2008 scenario, and the Fed needs to inject money into the economy and people start putting that money in Bitcoin, that they can make Bitcoin illegal and call it a counterfeit currency, and boom, it's done.
all right, getting back to the tulip bulb analogy, now that was a boom, and then it finally busted.
Yeah,
So people who stayed with tulip bulbs as money lost money, but those who cashed in and then converted it to real currency, they won out.
correct. And this is the funny thing. Believe it or not, Sir Isaac Newton actually lost the bulk of his wealth in the tulip bulb disaster. He actually got into it, wrote it up, and thought this is just getting absolutely crazy. There's no reason for tulip bulbs to be going out. Got out of the tulip bulb market. It kept going up and going up. And he's like, well, shoot, maybe I'm wrong. And he got back into it. And that's when it all fell apart on him. And that's Sir Isaac Newton, the guy with the apple.
Doesn't that go back to the old advice that get in when it's high and get out before it goes low?
Yeah.
So, in other words, people should have gotten out earlier with tulip bulbs as they should with other investments when you know that it may be taking a hit.
Because there's no fundamental reason to actually own Bitcoin. Now, I am technically invested indirectly in Bitcoin. There's companies out there that make semiconductors. There's companies out there, eventually when you go to use your credit card or debit card, it'll ask you, do you want to pay with a debit or credit on your card? Here in the next several years, you're going to go there and it's going to say debit, credit, or digital currency as the way for you to pay for your goods and services at a Walmart or Target or whatever. I'm investing in the companies that are actually doing that. So if Bitcoin takes off, just like with Jamie Dimon at JP Morgan, he wants to make money off the transactions, but he does not want to actually invest in Bitcoin.
All right, for the layman out there, because I'm confused myself here now. Uh, so Bitcoin could be a good investment in a certain way. Try to explain that more.
Okay, so it's like this. So uh, let's say let's say that your friend wants to basically, you want to buy some Bitcoin and your friend has some Bitcoin to sell you. So now, one of you guys, if Bitcoin goes bankrupt, one of you guys are going to lose all your money. I want to be the guy in between you. I want to introduce your friend to you and say, hey, this guy wants to sell you some Bitcoin. Here's a buyer over here. I want to be in the middle someplace and I want to get paid on the money moving from your friend to you. I don't want to actually own the Bitcoin.
Okay, and you'd be getting paid in real currency, not in Bitcoin.
Correct, correct, correct.
So that's
And
the yeah.
and and that's exactly what Jamie Dimon wants to do. He wants to be in the business of making money on the transactions. He doesn't want to actually own Bitcoin. And remember, this is the guy that sat back here during the housing bubble saying, "Hey man, I really don't want a lot of exposure to these housing stocks. There's something wrong with this subprime stuff." And that's why J.P. Morgan came out so strong in the housing bubble, is because Jamie Dimon had the foresight to go, "Hey, this party's got to end at some point, and I don't want to be there when the party ends."
Okay. All right. Well, we covered some interesting topics there economically, but wrapping it up again, getting back to the original topic, you think that Trump is not really justified in pressing Jerome Powell at this point to lower interest rates.
Correct, and I think he's wrong. I think you need to be more a little bit more data dependent and look at the economics before you start cutting interest rates for no reason. And then more to the point, can he actually fire him under the Federal Reserve Act? The Federal Reserve governor or chairperson can only be fired for cause. Cause in this situation is, fraudulent activities or something. I don't see Powell committing any kind of fraudulent activities here that would justify for cause.
Now, what's this about the boondoggle with the redesign, the renovation of the Federal Reserve building, and Powell could be enmeshed in that, and that could possibly cause to have Trump fire him? Explain that.
So the Federal Reserve building today, I think was built somewhere in the 1930s, and it's had no major upgrades. So about 2 or 3 years ago, Federal Reserve wanted to try to really modernize that building and get it into the 21st century with new technology, internet connections, and all that kind of stuff. That budget was for about $800 million for that renovation. The budget has actually turned into now $2.6 billion. And so Trump is saying that Jeremy Powell needs to be fired for mismanagement of that money. But here's the rub. That $2.6 billion is not taxpayer money. That $2.6 billion is the Federal Reserve's own money. That's the profits they have made from the bonds they hold on their balance sheet.
Could a case be made that the way they manipulated the bonds was fraudulent?
No, I don't think so, because they go in and buy treasury bonds. So when the US government issues bonds, the Federal Reserve at times will go in and actually buy those bonds and hold them. And the interest payments that come into the Federal Reserve, that's the profits of the Federal Reserve.
So these cost overruns are really not taxpayer money.
Absolutely not. There's no tax, because remember, the Federal Reserve is a private bank and every private business is in the business to make money.
But if Powell was involved in allocating contracts to, let's say, friends, and there were cost overruns that were winked at, and there might have been kickbacks, whatever. I'm just saying, speculatively. If that's the case, wouldn't that amount to cause?
Could be, if that's a tricky place, but that's the same thing. What if somebody at, let's say, Microsoft or Apple does the same thing? Would the president of the United States be able to fire the CEO of Apple or Microsoft for that?
Well,
No.
and that brings up the point that the Federal Reserve, despite its name, really isn't part of the federal government, correct?
It has. That's what always gets me. I think it was called Federal Reserve because they wanted to make it sound like it was a government entity. It's a private business. It actually has stock issued in it. According to the Federal Reserve Act, when the Federal Reserve was formed in 1914, I believe, it's actually against the law to make the shareholders known publicly who actually owns stock in the Federal Reserve, which is an issue, I think, by itself right there.
And that's why you say trying to fire Powell for cause, if this was a corrupt boondoggle, the renovation of the building, it would be like the president having no power to fire Bill Gates of Microsoft.
Exactly, it'd be the same thing. Exact same thing. And also, what kind of gets me on this is, a lot of people when they hear Federal Reserve, they don't realize this, but the Federal Reserve System that we have in place today is actually the third Federal Reserve System we've actually had in place. The first two was called the First Bank of the United States, and the second one was called the Second Bank of the United States. And the Federal Reserve we have today is actually the third bank. And if you're curious why the first bank and second bank went out of business, it was because of all the corruption and fraud involved in it.
So, so the third one, we don't know if there's corruption and fraud involved.
Correct. Third time's a charm, I guess.
Well, you know, it's also screwy is even though it's a non-government agency, it controls the U.S. economy.
Exactly. And I think that's a huge point. And this is also what gets me is one of the mandates of the Federal Reserve is to basically prevent market volatility, to prevent stock market crashes. And I've seen the studies on this. Did you know that more stock market crashes have occurred after the creation of the Federal Reserve than did before? Let's not forget, the Great Depression was after the Federal Reserve was created.
Yeah, that's right. So I think we talked about it in this past where you're saying that they actually made it worse with their policies.
Correct. And look at it this way. I'm sure you've heard the stories from your grandparents when they said they could go to the movies and they could buy, get in the movies for 10 cents and they could get a Coke and a popcorn for 5 cents. So 15 cents was your day at the movies. Today, almost have to take out a second mortgage on your house if you want to go to just walk into the movies, let alone buy popcorn and a drink.
And that's inflation.
That's inflation.
And is that the blame of the Federal Reserve?
I think so because one of the reasons for the Federal Reserve, and this gets into kind of conspiracy theories of was the Great Depression purposely created because the Federal Reserve was basically they were handcuffed because we were on the gold standard. So if you created $1 worth of paper money, you had to have $1 worth of gold to back it.
Right.
So that kind of strong armed the Fed. They couldn't go out and just print money like crazy. But the Great Depression actually got us off of the full gold standard. So
Yeah. So, Mark, if you had your druthers, you would dump the Federal Reserve, and what would control the economy in its place?
I think if you go to a free market economy where you let all the traders that trade bonds, who know more about the economy than probably the Federal Reserve does because they're actually trading real assets there, let the market be a free floating instrument to where the free market actually sets interest rates based on inflation and the economy.
So it'd be self-regulating.
It'd be a free market. It wouldn't be really any regulation to it whatsoever.
That sounds like the Wild West, though. I mean, isn't that subject to corruption,
Well,
collusion, fraud, schemes?
well, think about it this way. The stock market is technically a free floating. You see Apple stock move, 2 or 3%, or Microsoft move 2 or 3%. Same thing if the interest rates became a free floating instrument, they would move basically like that. Not as quickly as stocks because it'd be more of a set number, or even go to the degree, let the actual banks themselves actually set the interest rate policy versus the Federal Reserve setting it. Let JP Morgan set its own interest rate. Let Wells Fargo set its own interest rate. And that will make a competitive market to where they're always competing against each other, which should keep interest rates actually lower.
No. All right, Mark, thanks again for this analysis. Some of it's over my head, and maybe many of our viewers has as well, but I mean, you explained it fairly well and fairly simply for the layman. So, Mark Collinsworth of Vere Global Wealth Management, we'll be seeing you again soon as the economy remains in the news.
Thank you very much, Larry.